Well, welcome to another episode of Harbor Rock Wealth Management's podcast series, Life, Health, and Wealth, where we discuss financially driven topics and how they relate to our financial lifestyles. He's Reuben Smith. I'm Jimmy Lester. And today we have our first repeat guest, which makes you very special. You can only do that one time. Brandon Ratliff from Polaris Financial Group. Welcome back.
Good morning. Thanks for having me.
Welcome back, Brandon.
Thank you.
Yeah. Old hat. He's got this. There's no problems now.
Yes.
I think last time we were doing an overview of various insurance products, and one in particular, long-term care, that we're going to really hone in on today. I think that gets either pushed aside or discussed maybe too late when it's too late to act on it when you need it. And it's one of those that you don't really want to talk about that. That's a later stage in life that you would need this. It's not a particularly great time in your life. But a very important one at that. So we are going to dive into that today. But before we start, of course, I'm going to give us a sports stat of the day. So I often provide yogiisms, which are Yogi Berra quotes, and we'll get into that, why it's important today. But Nolan Ryan pitched his last game at 46 years old.
Okay.
Oh, wow.
Today.
Legend.
So I think that's pitching at 40, pitching into your late 40s in the big leagues effectively like he did. I think that's like amazing enough. But I just want to provide a couple other stats on him that were incredible. So this man had 7 no-hitters in his career. And if anyone's a avid baseball fan, they know how incredibly difficult it is to pitch a no-hitter. But at 7 no-hitters, that's not even really the most impressive thing. He had 12 one-hitters, which is absolutely incredible. So 12 more times he was almost at a no-hitter. And I bet some of those hits were just a little, maybe a bunt single or a little ducker out into the field, which is crazy. And then I want to add on to that. So he also had 18 two-hitters. So incredible. Like 30 times this guy gave up 2 hits or less.
Yeah, that's huge.
That's ridiculous.
Well, think about it. In order to qualify for as a one-hitter, two-hitter, you have to also pitch all 9 innings.
That is correct. And if anyone is, again, an avid baseball fan now, or even more so, a fantasy baseball player, they know that a quality start now is 6 innings of giving up 3 earned runs or less. And pitch counts are typically at about 100 pitches now, and there's so much money in these guys' arms now. A complete game is almost unheard of. And I've even seen some guys come out of the game in the 8th or the 9th still pitching a no-hitter because they've hit that pitch count.
It's more important to have a pitch count than a
different ball game.
No-hitter. Yeah.
Different ball
records.
So what team did he retire with? Was it the
Texas Rangers.
Texas Rangers, okay.
Texas Rangers. And so he was Angels, the Mets, I believe, originally drafted them.
Yeah.
And he was having his struggles. This man also, I think, has walked more people than anyone in the planet. And he is also the strikeout
when
king.
you pitch for 35 years.
Right.
So at 43, I get sore throwing soft toss to my daughter in the street. I can't imagine, pitching competitively and at that level.
Right. And you guys are coaching.
Yeah.
Brandon, you're coaching your daughter's
Soccer team, co-coach, and then coaching the football team, co-coach. Yeah, so I have support. I have, people that are doing it with me, which is hugely helpful. But
Right.
I made the mistake of, last week, and I know we're getting off topic, but last week the girls weren't listening. We coach a U10 soccer team. They weren't listening. So I made the mistake of challenging coaches versus kids.
Oh.
So it ended up being 3-on-10. And they did beat us.
They did. Wow.
Somehow the cones, we set up cones as the goal, but somehow the cones ended up the whole baseline of the field.
Okay. Makes it a little
Needless
easier.
to say, we lost, but
Yes.
That's okay.
Anyway,
It's next time.
I'm sure that there's a
what I was saying is I was sore. I couldn't walk very well. I wasn't walking normal for a while.
So this will take us into our discussion on long-term care.
There you go. Yeah.
So Yogi Berra, who I provide these yogiism quotes, I found out that today, on this day in history, Yogi Berra died.
Oh, wow.
Yogi Berra
R.I.P.
died at 90 years old. What a character. And a quote that I like today, and this is one that I've heard since I was a kid. Baseball is 90% mental. The other half is physical. So the reason why I like that is this tells me don't overthink things. When you're thinking about long-term care, get in front of a professional. You can do your own homework. It can be very confusing from from what I've heard, and you want to make sure that you got this thing on lock and that you are fully prepared to be taken care of in a great time of need. So get in front of your financial professional, get in front of your insurance professional, and that'll take us into discussing what exactly is long-term care and what are some of the different products, maybe some of the benefits. And I know you as a CFP, Ruben, and you, Brandon, as the insurance professional, maybe you guys can start having a discussion about that. What is long-term care?
Yeah. Well, just a quick story on long-term care. At our prior firm, I was right when I started there, I was asked to present how in front of my peers. There's about I don't know, the room was probably 40, 50 other advisors, and I was invited to present a financial plan or a sample plan. And it got to the point in the financial plan when I modeled a long-term care event for a client, and the room was becoming restless, a little uncomfortable. I couldn't figure out what was going on. People were snickering in the back, and finally my boss at the time said, "Hey, what's going on? Why are you guys laughing?" And one guy chimes in and says, "If you model a long-term care event, you're going to blow up the plan. You're not going to earn their business. You're going to show them running out of money." And I kind of laughed but at the same time looked at the guy saying, "Well, if you're not modeling or you're not talking about long-term care or a long-term care event, what service are you really doing? Are you doing to your clients? Are you an advisor? Or are you an asset manager? You gotta, So anyway, needless to say, long-term care, it has been a conversation that I've been having for pretty much all 21 years I've been in the business. And it certainly has changed a lot. When I was at my prior firm that I just mentioned, we weren't allowed to offer those services. We could certainly model an event. And just being out of the game, so to speak, for 8 years or so, a lot had changed in that time. So we rely heavily on Brandon and his team at Polaris with any of our insurance needs. So I'd like to dive into, let's just start very high level, long-term care insurance 101. What is it? What does it cover? And how does it work?
Yeah, long-term care insurance is hugely important, I think, in a plan for asset preservation or protection or just purely for peace of mind if you want to know that you're going to be cared for properly or have the means to care for you or your spouse or a family member properly. And just as what it sounds like, it's an insurance policy that provides the financial means to care for somebody towards the end of their life. If somebody has needs that are medically related, that might have a nurse coming in to take care of them or watch over them, and it could be in your home, or it could get to the point where it's going to be in a facility where you have to have somebody 24/7 watching you or providing those services. But it gives you the financial means to have somebody care for you or your spouse or your family member, and I think that that's really the basic fundamental of it. Now, there's different ways to skin that cat with product and strategies, but at the end of the day, you want to plan for that because as most of us age, things change, and you never know what is going to be in front of you. You might just expire and not have the need for long-term care, but the lion's share of folks do have some need at some point for long-term care, and you don't want to put the burden on your family entirely, so you want to have the ability to support that event.
Right, and it seems with the advancements in medical technology and healthcare, people are living longer and longer.
Absolutely, yeah. And so, it's interesting. Females tend to have a longer long-term care need than a male. They have, I guess, greater longevity. So the average claim for female is just over 3 years, and the average claim for a male is just under 3 years. So, you're talking average. Sometimes you go below that, sometimes above it, right? So, you have 3 years of expenses or care that you're going to need to plan for. And some people want to plan for more, some people plan for less. It just really depends upon what their philosophy is, and also longevity in their family. We've had a lot of situations where we've had clients that have said, "Oh, you know what? My father had Alzheimer's, and I saw, what that did to the family. I saw how My mother dealt with it, the stress that it was put on her, and we want to make sure we plan for, prolonged event, in our planning situation. So they might want a policy that lasts longer than 3 years. So there's a lot of flexibility in the planning.
Mm-hmm. So a personal experience is that on my dad's side, both my grandpa and my grandmother went into a assisted living type facility, lived right across. They had their own apartments, lived right across the hall from each other. My
That's neat.
my grandfather made it a matter of months before he passed away, and my grandmother was over 9 years.
Oh my goodness.
And Henri, she got kicked out of I think 4 or 5 facilities, so she had quite the rap sheet going there.
Yeah.
Yeah. So
Yeah, that's interesting.
I like to think of long-term care. Why you would entertain long-term care is for flexibility, meaning choice of care, and it's asset protection.
Correct,
So you're leveraging essentially an insurance policy to pay for this type of care and allowing you to preserve what your nest egg or whatever you have in your assets to pass on as a legacy.
Yeah, yeah. I think the last thing, at least me personally, what I would want to do is work hard for my entire life to know that I'm working to pay for my end of life care.
Right.
Like what I want to work for in my life is to provide for my family, to provide for the future generations, hopefully to pass on something and live a comfortable lifestyle. And I think that, knowing that there's that long-term care bucket, whatever it may be, to provide for that end of life care, that you have more freedom to enjoy your assets, that you have more confidence that they're going to be passed on to the generations. And as you mentioned, asset leverage. And as James and I were talking about earlier, the comfort to know that you're going to have a choice in the type of care and services that you're going to receive. And you mentioned that too, Ruben, which, I've seen it from my grandmother. She was put in, a state-funded program, and it was not a pleasant place to visit.
Right.
I couldn't imagine living there.
Right.
But if you have the ability to cover the cost through insurance or however you've decided to make that strategy, gives you the flexibility to have somebody come into your home, to have a nurse in your home, to choose who you want to take care of you or what facility you want to go to or how you want that care to look like.
Yeah, and that's what I was talking about with choice of care is the ability to have someone come in home. It's your comfortable surroundings, right? It doesn't mean they're there looking at you, sitting in the chair next to you, looking at you.
Sure.
They typically come in a couple days a week, maybe a couple hours a day, depending on the level of care needed. Let's talk a little bit about the types of coverage, because when I started in the business, there was really one main type of coverage. That would be a traditional long-term care policy. And then there started to become what I call hybrid policies, where they were paired up with permanent insurance or whole life insurance, universal life, I think, insurance policies. So the traditional long-term care insurance, a lot of feedback that I got from clients was, well, what if I don't have a long-term care event? Who benefits from the premiums? Does that go back to me, my family? And it really wasn't. It was kind of a use it or lose it, right?
Yeah, and it still is. I mean, that market has changed substantially over the last 10 years. So we currently only have one true traditional long-term care option that we work with right now. And to be honest with you, I would say 95% of the business that is done for long-term care insurance on our end is asset-based, or what we call linked benefit long-term care. 2 reasons, one of which is that the traditional long-term care insurance, the policy premium costs are not guaranteed. And, as the insurance companies have found over the years, is that when people have long-term care insurance, they don't let it go. They keep it. They understand how valuable it is. And as they age, they understand that even more so. So the lapse ratios were down, and actuarially the pricing of the products was a little bit off. So the traditional long-term care policies, the insurance companies can raise the premiums on them if they get approval from the state.
Right.
So we've had situations where even my mom, she's a retired teacher, where she received a premium increase, and it was like a 90% premium increase. She's on a fixed pension, so we had to figure out how to make it affordable for her, and thankfully she was able to figure that out and keep the policy. But with the asset-based long-term care, On linked benefit long-term care, you can actually put in full guarantees. So you have no concern that the insurance company could potentially come back and raise the rates and that there was inaccurate pricing. It's protecting the consumer.
So how I'm hearing that is a traditional policy, the risk as far as premium increases on the client. And in a linked policy or one of these hybrid
Asset-based,
policies,
yeah.
asset based is the risk of future increase in costs is actually on the insurance company.
Correct.
Okay.
Correct. Yeah, and they're pricing. I mean, right now, your traditional long-term care policies, we would hope that they've been able to kind of dial in the pricing a little bit more, and a rate increase would not be inevitable. But again, you do have the insurance company does have the ability to increase rates at some point if they felt as though they needed to maintain profitability.
Well, one of the shocks that I had after being out of the game, like I mentioned, is one of our first conversations. I said, "Well, how is such and such company doing?" And they were one of the founding companies as far as getting into the business in 1977. They were really a mainstay in long-term care insurance, and you told me they were out of the game. They had mispriced their policies. It's a very difficult insurance to try to price. And to that point, you said there's only one traditional long-term care provider
that
right
we
now.
have access to on the brokerage side. So
Yeah.
there are some insurance companies that offer it direct, through their direct sales channels. So
I got you.
Yeah.
I got you. So it's not surprising to hear about these asset-based programs.
Yeah.
So talk a little bit more about those. Are they life insurance, annuities? What's the common
That's
selection?
That's a great question. They could be both. There are
Okay.
annuities that do have long-term care components to them that allow clients to accelerate the annuity proceeds to cover long-term care events and actually leverage sometimes double or triple the annuity value if it's used for long-term care.
Okay.
And then the other thing is it's a lot long-term care insurance on a life insurance chassis where there is a life insurance component to it. So if the client were to expire prior to using the long-term care, the life insurance death benefit will pay the beneficiaries. Oftentimes it's almost like a return of premium. And then the other side of that is that it contains what they call a rider, which provides long-term care benefits anywhere from 3 years to lifetime. So you could have lifetime benefits, and you have single life policies, and you have joint life policies. So you could have a husband and wife on the same policy, and you could have husband and wife on the same policy that has a lifetime benefit.
Right.
Which is pretty amazing. Those traditional policies that had those lifetime benefits were gone, a decade ago. Whereas now you have the ability to do that with this asset-based long-term care, and it's priced pretty well. I mean, and it's fully guaranteed.
So that leads me to the next topic that I want to discuss is the cost. Not all, and the fact that not all policies are created equal. Just because you have long-term care insurance doesn't necessarily mean it's an effective policy. You mentioned riders. There's all sorts of switches, if you will, that can be flipped on or off within a long-term care policy, whether it's maybe an inflation adjustment or how often you fund the policy. That can determine the ending benefit that you're eligible for. So talk a little bit about that as far as pricing goes from a consumer standpoint, because I feel like this is why you need advocacy in this space. It's not just go online and fill out an online application and assume you have adequate coverage.
Yeah, no, there's a lot of different types of, like you said, riders or benefits with a specific product as compared to another product. I would say the good news is, regardless what product you choose, we do have some oversight from, in our state right now, California Department of Insurance, and any product that is sold in the state has to get approval from the state. And, the state is looking out for the interest of the consumer in most cases. Right. So, you're going to get a policy or a product that, will cover you for similar events that a policy would for, any carrier out there. So there is that protection. But with that being said, is that you want to look for a policy that has, in my opinion, guarantees, because you wouldn't want to be subject to rate increases. Inflation protection, I think, is a huge component of a long-term care policy, depending upon age. If somebody's 75 years old and they purchase one, it might not be cost effective. But having somebody that kind of has their finger on their pulse, like you and you working with us, is that, we can help guide the client to the right product that'll fit the needs, that has the bells and whistles, or doesn't have the bells and whistles that need to fit their premium tolerance and their long-term care plan.
We mentioned home care earlier, and that's a huge one. Most people see when we first bring up long-term care, they think of facility. They think of, I'm getting shipped off.
Yeah.
And we've run several cases where home care, 100% home care benefit is absolutely a necessity.
Yeah.
So, okay, there's an option. There's one of the switches that we need to make sure is inside this policy. So all of these attribute to the underlying costs or premiums.
Yes, absolutely.
What about, I'm sorry. I was going to say, before I forget, what about someone like me and my wife? We don't have any children. And we have this discussion now. She's 40, I'm 45. We're largely healthy. We don't have a lot of too much family history with, fortunately with someone who's had a stroke late in life that needed this care or would have needed this policy. Do you find that people because she'll ask me, who's going to take care of us?
Yeah.
Chili.
Yeah, Chili, my Chili dog, but honestly, she's like, you better go before me, because we have these discussions on a pretty light note, but she's like, who's going to take care of us? Because look, your dad is older and he has some needs, and you guys are local, and that's nice that you can go over there, and he may be approaching a moment that he's going to need some more care. And I think a lot of people, they think, I'll take care of you, honey. I got you. We're healthy, and you'll take care of me when I need it. But I think or family members do that, I think. They're like, we'll take care of mom and dad, But they got to remember that the kind of care you're talking about is skilled care. These are professionals. This isn't like dad's leg hurts and he needs help getting up, from the chair. No, they've had a stroke. They've had some other more catastrophic type event. That these are medically trained professionals. No knock against your big heart to help your family out, but you need professional help, and that's expensive. I don't think people. What's the biggest reason more of our people that we come across don't have long-term care? We come across a lot of folks, and we always ask, do you have any insurance? Do you have long-term care? In my experience, sitting with a lot of our clients over the years, we don't see it as much as I would think now, being in the industry, of how important that could be. And I don't think they're lazy, they are cheap. I don't think those are the things. I think it's almost, you don't know what you don't know.
I think it's lack of education.
Yeah, maybe. So I just find that interesting. And so going back to that, for someone like me and my wife, at our ages, when is the right time to start seriously considering a policy?
Yeah. I mean,
is it too early for me?
I wouldn't say it's too early.
Well, he's 22.
22. I would say, though, the strategy.
Let the cat out of the bag.
Yeah. That's where the strategy comes in. When you take a look at somebody like, you have a client and you're going to do their plan, and you look at what their needs might be. And, for me, I have a long-term care rider that's on a permanent life insurance policy. So, for me, I want to have life insurance that would take care of my children, my wife, allow them to maintain the lifestyle. And then in this case, both my wife and I have a long-term care rider attached to a policy. So it'll accelerate the death benefit for long-term care, should we need it. Now, the likelihood of us needing it at this stage of our life is very slim, but it's there just in case.
Is there any limitations on that? Let's say I got a policy at 45, and at 55, I needed it. I had something happen to me. Is it ready to go?
Yeah, it's ready to go from day one.
All right. So it's not like an IRA where you have to wait till 59 and
Sure.
a half.
No,
Okay.
nothing like that. Yeah, no, day one. Just like with any life insurance, long-term care, disability insurance, once you put a policy in force, the benefit is there. There's no season, period to season the contract until it pays out.
So the advantage of doing it younger, especially if you're going into one of these asset-based programs, is that they are guaranteed. You have the ability to build in these guaranteed benefits. And a lot of times there is an inflation hedge in there, right?
Yeah, absolutely.
So that'll be growing with you, even though, you're not, the likelihood of you having a long-term care need right now is small.
Right.
At least you have that peace of mind knowing that it's growing with you.
Sure.
Yeah. And I think one of the biggest, from what I've seen personally, but also just from the stories that we've heard about, is that, if a family member is deemed to be the caregiver, right? If you have a spouse that says, oh, I'm going to take care of John and, John's going to take care of Sue, right? Well, the stress that it puts on the caregiver is unimaginable. I mean, we think about it and we think, oh, you know what, I'd be able to hang out with my spouse and, provide care for them for 2 or 3 hours a day or whatever it might be.
Yeah.
But that progresses, number one, to be more of a commitment. But secondly, it puts extreme emotional stress on the partner giving the care because you're vested. It's not something where you have a nurse that's a professional that's giving care. You have somebody that's emotionally vested with that person. And then they're having to change their lifestyle and having to focus on providing the care. And
I think they underestimate that.
I think, 100%.
And any one of us that have ever cared for, at any level, more than a hug and a, hey, I love you, Mom, or anyone that's put in that moment, it's heavy.
Yeah. No,
It's very heavy.
So we have a couple of examples that over the last couple of months with clients, and actually my neighbor has Parkinson's, and we've lived in the house for 6 years, and he's had Parkinson's the whole time, and it's at a point where his wife, it's becoming too much, and to that point, it is a lot. It is a lot of physical, constant demand, whether it's mental or physical, for the healthier spouse.
Yeah.
Now, what's ironic is he's gone into a facility. When you now come across her, she's in better spirits. You know what I mean? She has adequate rest. She's able to take care of herself. She's sure she misses him and wants him around the house, but she's getting some of her pep back, and so there is some reprieve, if you will, or some relief in doing so, which goes into the whole planning.
Well, it could almost create like some resentment. Can you imagine that, having that feeling of resentment towards your loved one, which you can't really control because you have to do it, and talk about the emotional it's so big.
Well, I'm not saying they're like kids, but they're like kids.
Yeah.
You know what I mean? It's in a lot of cases.
They raise you, and then you get to the point where you're taking care of them. That's the cycle of life.
Flip-flops, right? Yeah, no, it's the cycle of life. You're right.
Is there any time that, and not to put you on the spot on this, but is there any time that you would recommend that someone does not get a policy? Is there any reason that, like, beyond, like, especially beyond affordability, like sometimes if it's going to really, financially, like, say, hey, look, this monthly premium for you,
it's not in the cards.
Yeah, this monthly premium for you is really going to put you like at a tough spot.
I think that, number one is to look at somebody's ability to pay the premiums and how it's going to affect, and then the benefit that it would provide for them. I think for the most part, I see it as being a value add to any of the plans that the advisors I'm working with are working on for their clients. I've had a couple situations where somebody's, net worth has been, it's to the point where it really wouldn't benefit them that they have the means to pay for it out of pocket, regardless if it was a $500,000 claim or a $5 million claim. It wouldn't really have made a difference in their net worth or their financial strategy. And in those cases, I think that obviously, they can make a decision to say, okay, I want to self-fund, or I and it's not going to be a problem if I spend $1 million and it expire, or, they don't, or they just expire. So I think there are those kind of very unique situations where it doesn't seem to be beneficial. But if you look at the actual internal rate of return on the benefit that somebody might receive compared to the premiums paid, on that long-term care benefit, it's a strong internal rate of return. And I don't know many financial advisors that would be able to say comfortably, hey, you know what, I'll guarantee you that I'm going to earn you 12% on that money. Guarantee you I'm going to earn 12% on that money. And you know what, that's what the value of the long-term care would provide for your state. They might say, well, we project that we would earn you 12%. And I don't mean to discount what you guys
100%.
But we project we'd earn you 12%, but project is different than guarantee.
Yeah.
No, absolutely. It kind of reminds me of we often have clients come to us with pensions, and a lot of corporate Americans trying to do away with pensions.
Sure, yeah.
And so they come to us with these pensions, and they say, "Well, look, I can get this lump sum. Is it worth it?" We had one the other day, and it's enticing. It looks nice to get that lump sum. However, when you go back in and do the math, the internal rate of return is something, and it's even in the excuse me, 6.5 to 7.5% range.
Right.
That's still something that I don't touch.
Yeah.
Because I'm not going to. It's not in their interest. The minute they take the money out of that pension, now the risk is on them.
Yeah.
Why don't you keep, as long as the company's solvent, and in good standing,
Yeah.
keep it on them. So
Yeah, exactly. Keep the risk on somebody else.
so it really goes back into the planning. Now we have a lot of clients that do self-fund, and there's ways that we can do that. But the bottom line is that we have this conversation with every single client, and you're right. Some clients, it's just they're in a position where even if they want long-term care, it's not financially a good decision for them to do that. It would just put them in a worse spot while they're in this while they don't have that need. Let's shift gears and talk about what's on the horizon. There's some states out there, California being one of them, that are toying with the idea of adopting kind of a state-run program, if I'm right, and where this would be implemented in the way of a tax each year.
Yeah. Yeah.
So what do you know about that? What are the time frames, and where are we at with that?
Well, right now, so I guess the most recent state that we were exposed to that went through it was the state of Washington. So they came up with a payroll type tax. I think it was 58 cents per $1,000 of income to fund a state sponsored long-term care program. And the benefit I think was a 2-year benefit period and maybe a $3,000 monthly benefit. I could be incorrect on that. But anyway, so for somebody that didn't have long-term care insurance or they were unable to get it due to health concerns, it's a good program. It's going to kind of provide a backstop for a lot of the people that didn't have the ability to get long-term care or were relying on the state to sponsor it independently. There's been a handful of states that have adopted the agreements as well. Like East Coast, I believe Pennsylvania, it did one recently, and there's a bunch of other states that are discussing it or looking into it.
Okay.
So California has looked into instituting a tax to fund a state-funded long-term care program. Now, I don't really know any of the details about it. I do know that it could potentially benefit a lot of people that don't have the ability to fund long-term care on their own or don't have the health to qualify for long-term care. I do think that, there could be an opportunity for a lot of people to get long-term care themselves and be able to have a service or, a care opportunity that would be far greater than what the state might be able to provide.
Right.
Based on a program that they would institute.
I've always been a fan of any way that you can maintain control over financial decisions. It's going to benefit you.
Yeah.
So that even goes all the way down to leaving an old 401k at a job that you worked at years ago. Any time that you can remove that level of bureaucracy between you and your money and get control of it, or a financial decision like this, I think it would benefit you. Now, assuming that it makes sense for you to go out and obtain your own insurance in this case.
Yeah.
But I agree with you. It's a big concern if you just hear about the demographics, the aging population, and at a state level in California, it's Medi-Cal. I can only imagine how many more and more, how many citizens are getting to the point to where they're on the state's dime for this type of care.
Yeah, absolutely.
So I see it as a big risk.
I see it as a big risk, and I also see it, as a situation where, as a consumer, you want to make the right decision to make sure that you're taken care of. And I think that, if there is a tax that funds a long-term care program, nobody likes to pay taxes, especially in California, where our tax rate.
Another tax.
Another
It'll
tax.
get some pushback.
Yeah, exactly. And I think that the politicians and the people that are making the decisions are certainly keeping that in mind, right? But like the state of Washington, they gave their their residents an opportunity to opt out of the program if they had long-term care insurance in force prior to the program being initiated. So, for them, if somebody was a high income earner and they were like, well, we don't want to pay that tax, they could potentially purchase an independent standalone long-term care policy and opt out of the state program. And, we don't know if that's going to be something that the state of California will allow for if they do institute a program. But, it's something to think about. And, like I said, nobody wants to pay more taxes.
Well, I'm happy that you're here because we're staying in front of this. This
Yeah.
is something like I mentioned is part of every conversation that we have with clients, and you brought it to our attention a few months back, and I thought, you know what, we got to get you in here and at least
Yeah.
allow our clients or our audience to be made aware of this. It sounds like this is a ways out. This isn't something that's going to happen, tomorrow.
Well, no, I think that it's probably going to be next year or the year after, from what
Okay.
from the rumor mill, I guess you'd call it.
Sure.
The insurance companies that we work with.
It's good to stay in front of it.
Yeah, absolutely, absolutely.
Well, great. Well, time flies again. Thanks to the insurance legend, Brandon.
Thanks
being
for
here.
having me.
You know what? You're really proven to be an invaluable resource for our clients.
Absolutely.
You're definitely a friend of Harbor Rock and the show, and we look forward to having you on again and again, especially as things come down the pike with what's going on with this program.
Yeah.
I'm sure there's going to be a lot of questions, and I already can think of a few. But again, thank you for being here today. And to our viewers, thank you for joining us in our digital barbershop. If you're living your life and you have your health, then you're the wealthiest person in the world. Thanks again for joining us.